Okay, this is the last video, with the exception of the project video, but this is Module 6, so you've made it all through this course. So in this module, we're going to be talking about internal controls, governance, fraud, and risk management. So here you need to be aware that it's very important that a cooperative have effective internal controls. And you need to understand some basic principles of corporate governance and make sure you have a good comprehensive risk management process in place, and then understand how to mitigate and detect fraud. And one bonus with this module is there's no textbook chapter and no online quiz. So I'm sure you're happy about that. So the survival of cooperative, or any business for that matter, is highly dependent on having effective internal controls, particularly surrounding governance, fraud detection, and attention to risk management. So if you have a lack of appropriate oversight on any of these four areas, this can lead to the failure of the cooperative. So while these matters are generally well managed by medium to large size cooperatives, they're sometimes neglected by the very small co-ops because they think they just don't have the resources to address it. However, regardless of size, it's really imperative for co-ops to have appropriate oversight of internal controls, governance, fraud, and risk management. And keep in mind, it doesn't necessarily mean a significant investment of time or money to get those controls in place. So when you look at internal controls, you're looking at the efficiency and the effectiveness of the operations. You want to have reliable financial reporting. So is the reporting based on information that's valid? Have all the transactions been recorded correctly? Does it represent the true economic substance of what the cooperative has been doing during the period that you're reporting on? You need to make sure you're complying with any rules and regulations governing your cooperative. So a common one here is an example of effective internal control is it's a separation of duties or segregation of duties, say for accounts receivable and bank reconciliation. So if one person is responsible for accounts receivable, they should also not be performing the bank reconciliations. Similarly, for the accounts payable function, that should be separated from purchasing. Shouldn't have the same person doing both accounts payable and purchasing. And also, it's important to review and approve new suppliers, because this is a classic, area where fraud could occur. So somebody could set up a fake supplier, it's really themselves, and then if they're in charge of accounts payable, they could pay themselves or a family member or something of that nature. And when you're looking at suppliers and employees, it's important to have a recognition that all employees are aware they must declare a conflict of interest. So if you have an employee, regardless of where they're working in the organization, if they have a family member with a business that's doing business with you, then they have to disclose that. It doesn't mean to say that you can't do business with a company that has a relative working at the co-op. It doesn't mean that at all. It just means you have to have appropriate controls and oversight in place. So another important area is the topic of governance in terms of your board of directors, the committees of the board. Depending on the size of the organization, you would say have an audit committee, a compensation committee. So the compensation committee would determine the salary for the CEO, for example. And when you're formulating your board, it's important to consider both democratic control and member involvement. With the way most boards for co-ops are constructed, it's difficult sometimes to get the level of expertise you need on the board. So say, for instance, you're pulling, of course, your board members are members of the co-op, and if none of those board members, for example, are accountants or lawyers, it's hard to get that expertise then on the board if you don't have that in your pool that you're drawing your board members from. So that really necessitates the need for financial education for your board of directors if none of the members are accountants, for example. Another area to think about is fraud. So management is responsible for having good internal controls in place to mitigate fraud. People think that it's the responsibility of the auditors to detect fraud. It isn't. I mean, sometimes through their audit procedures, they do uncover fraud, but that is not their main goal. What they want to examine is, do you have sufficient controls in place to mitigate fraud? So they're not charged with finding fraud. As I say, sometimes they do, but not always. However, you have to recognize, even when you do have all of the controls in place, you have textbook example of internal controls in your organization, and you could still end up with fraud because you could end up with collusion between two individuals. If you have two or more individuals who are in collusion, then you could still have fraud. So say, going back to my previous example where I talked about segregating accounts payable and purchasing, so you shouldn't have the same person doing both. But you can also have a situation where the accounts payable person is working with the purchasing person, and they're setting up fake companies and invoicing for goods and services not provided and then splitting the profits between them. That can happen. So what you do here is to be aware of the potential for collusion. If you see, for example, someone who's making, $30,000 or $40,000 a year, and all of a sudden they're driving expensive cars, going on extravagant vacations, that's a little bit of a warning sign. Maybe I'd better have a look at what's going on in the company. So if they're living well beyond their means, if they hadn't won on the lottery, then something might be happening in your organization that you need to be aware of. So risk management is another very important area for all businesses, including cooperatives. So the board of directors is predominantly responsible for oversight of the risk management processes, but management has to play a key role and work with the board to ensure the organization follows a comprehensive risk management practices. So risk management includes leadership and strategy and even performance of the board of directors themselves. So management must ensure that the board receives extensive education and professional development regarding the role of the board and their oversight responsibilities. So fortunately, there's lots of resources online for this, and in particular, you will see in the module I have links to CPA Canada's resources on board governance and risk and all of that kind of thing. So these tools, just because they're developed in Canada doesn't mean to say they're not applicable. They're very relevant for pretty much any other country, and they're very good resources. So if you're looking to provide education for your board, you don't have to make this stuff up. It's all out there. It's just a matter of digging it out and coming up with a presentation and giving them the resource materials. So when we look at risk of leadership and strategy. So do you have the right leader in your organization? Are they effective in their roles? Do you have a sound strategy? Do you have a good strategic plan for your organization that takes into account the environment in which you're operating, not just looking at sustainability, but looking at the total environment, the market in which you're operating, global competition, etc. You have to look at the performance of the board. Are they really scrutinizing the reports you're giving them? Are they asking the right questions? Are they holding management to account? Are they showing up for the board meetings? Are they potentially trying to promote themselves or their own companies, organizations at the expense of the co-op. You have to think about all of these factors when you're looking at board performance. Of course, with COVID-19, it certainly highlighted the importance of pandemic preparedness. How prepared are your employees and your management to pivot to work from home on a moment's notice? You know, that's really important. Cybersecurity. Well, we've certainly seen a lot of examples of cybersecurity issues in the media. You know, it's hardly a week goes by without some report of a company's data being accessed, you know, unauthorized access that could, you know, end up with your personal information being used inappropriately. So having really strong security over your IT and your data, it can't be overemphasized enough. Then, of course, we have climate change. We've seen, certainly in past years, from all of the fires during the summer season, for example, the huge impact that climate is having on everybody, from individuals to businesses. So, you know, if you're in a forestry co-op and you know, you're having a lot of forest fires in the area that you're using, then obviously that has to be taken into account in terms of the co-op developing its strategy and adjusting its strategy to address climate change. So for your very last Living Lab assignment, here again, you can either use your own co-op or another co-op of your choosing and reflect on the 4 topics that we've covered here: internal control, fraud, governance, and risk management, and identify areas where you think your co-op could make some improvements. So describe the weakness that you have observed in your co-op, and then based on the resource material included in the module, provide some recommendations as to what you think your co-op should do to address these weaknesses. So that concludes the video on Module 6.